what is happening, as you know, it's devastated many economies and many countries and many industries and many companies. Handling it less badly than others, but it certainly caused the world economy to slow. But, Samina, if you compare to a year ago when everything was closed, now things look great. I live in Singapore. A year ago, there were no flights. Now there are a few. So everybody says, wow, things are good. Look at all these flights. But that's only because it's in comparison with the disaster of a year ago. Things will continue to get less bad, but it's not over yet.
Jim, financial assets usually are a reflection or preempt what is going to happen to the economy. The Indian equity markets, like you rightly pointed out, were at their worst point exactly the same week a year ago. US equity markets have been rallying higher and higher. A bunch of commodities are doing quite well. What do you feel is the general outlook? I know it's tough to put it in one basket, but if I had to ask you, do you feel like financial assets, equities, commodities, oil, even currencies for that matter, may be on the upswing going ahead, largely because you have central banks once again pumping world economies with lots of free money?
Very perceptive, Samina. Yes, never in world history has, well, I'll use America since it's the largest, never in world history has America printed so much money and driven interest rates so low. Many other countries copied, Japan, England, other countries, and this has never happened in world history. If you ask me, it's not going to end well, but it certainly caused a big revival. As you know, the US stock market's at all-time highs. Many asset classes have gone up a lot. Bonds have never been this expensive in the history of the world. So bonds are clearly a bubble. This never happened in world history, so bonds are a bubble. Some stock markets, parts of stock markets in America, Google never goes down. Amazon goes up every day, 10 cents. Samsung. So some stocks around the world are beginning to form bubbles. Not all. Property in some places, if you go to Seoul or New Zealand, property is clearly a bubble in some places. The cheapest asset class that I can see around the world are commodities. Silver's down 50% from its all-time high. Sugar's down 70% from its all-time high. So the cheapest assets that I see are commodities, but they keep printing money to me. So things are going to be okay, at least for a while, in the markets.
You're right. We'll talk about commodities in a minute. But so if you do believe that real consumption or demand is not keeping pace with the prices some of these stocks worldwide are reflecting, that means it's only a matter of time that we're staring at a correction and a big fall from these levels, right? Do you anticipate that there could be further upside and then a decline? Or do you think we're around the corner from a pretty big fall?
I am not very good at market timing. I suggest you watch your program, you watch your Global View to get market timing. I suspect it's going to go on for a while because even if things calm down in the markets, central banks around the world are going to panic and print more money and put more money out into the system. Remember, Samina, these are not very smart people. They're bureaucrats and academics. Actually, you in India had one of the best central bankers that the world's seen a few years ago. He's gone now, but he was really, really smart and very good. But most central bankers are not very smart people, and all they know is to print money and to borrow money. And so they'll do that. Eventually, Samina, of course, the markets are going to say, wait a minute, we're not going to play this game anymore. We've seen this movie. We know how it ends. We're getting out. And then it will be too late.
Yeah, we are, of course, staring at a pretty painful situation. You can't, of course, discount the fact that the world is, at least in India, collapsing around us as we fight a pandemic. I just want to quickly talk to you about India before we move on to, the other asset classes. How do you feel about India right now, Jim? We are, like I keep reiterating, going through a pretty painful second wave. we are anything but the darlings of global investors now. A lot has changed from a lot of a lot of conversation about structural reforms that our prime minister was talking about. I think most of us have realized, or at least most people internationally have realized, that that may be far from the truth. How do you feel about the India story? Is it still intact? Is this a pause? Or is it there is a structural change that you're witnessing where India is no longer a favored market for global investors?
Well, Samina, I'm not there. I only know what I read in the press and on the internet, and it sounds like it's a horrible, horrible disaster which is taking place. I mean, it sounds. I mean, I guess you read the same press I do. People are dying in the streets, hundreds of thousands of cases, people dying, and no hospital beds, etc. So it's having a devastating effect in India, perhaps worse than most countries. But the consequence will be that the debt is going to go much, much higher in India. And India already was becoming a debtor, a large debtor. And I'm afraid that this is going to cause longer lasting problems for India than it will for some other countries. I mean, America, listen, I am not defending America because America's worse. I don't know if it's worse, but it's horrible. Japan, you look at some countries around the world, but this is going to have a long lasting effect in India. I'm American. I have teenage children. I will tell you, Samina, this is a good time to be an old American because I'm getting the benefits of all this and I don't have to pay for it. But my children, oh my gosh, it's not good to be a young American now because they're going to have to pay for it. They're inheriting gigantic debts. And I presume I would say the same about young Japanese and maybe young Indians. I should ask you.
Yeah, well, it's of course we're paying for what we reap. But of course, Jim, and again, let's talk about how you feel because you have the opportunity to invest in Japan. You could, of course, go out and pick up US equity markets. Unfortunately, or fortunately for Indians, we can't invest more than $250,000 per person per year outside this market. So our large exposure is and will remain Indian equity markets. But you don't have that problem. How do you view India? Is this a buy right now for the 5 to 6 year period of time, or is it a complete avoid?
Well, it's a very good point and good insight. Normally, one is supposed should invest when there's a disaster going on. And unfortunately for me, I haven't looked closely enough at India. I've just been reading the headlines. And one of the things I've learned for many years is when you see horrible headlines, don't just say, oh, that's too bad. Then take the next step and see if you should invest. And I haven't done that yet.